All right, so I've coached a lot of people over the years in terms of trading, really how to get people successful and seeing and understanding what goes wrong when it comes to trading, investing, and actually making money from the stock market. Now, there's a lot of popular YouTube channels out there, way more popular than mine, and you might think mine's popular, but there's a lot of people out there more popular, including some of the big news channels. And what you'll find is that there's a lot of people that are attracted to these things, the dreamers, the visionaries, and this is what's great about news or YouTube channels that just talk about the general concepts of companies. Talk about what's going on with Tesla, what's going on with Airbnb. How's that doing? How does that drive prices? What's the earnings? Who's the new CEO? And what this does is it really creates a form of gossip, but it really doesn't help you in terms of trading and investing. Not so much. It's really a fallacy in the sense that you think you understand it, and it makes your mind believe that, hey, now I understand what's happening, so I think I'm going to make a better trading decision. But the reality is you don't really know where the price is going to go. So there's two main things that are missing from a lot of people when it comes to the big YouTube channels, to the news channels, that really will help you out in terms of making better trading decisions or being more profitable. And one of those things that are lacking or people don't talk about is trading psychology. Trading psychology is probably one of the more and most important things when it comes to investing and trading. It's, for example, can you stick to your plan? Can you be more disciplined? Can you be more persistent in doing the things you need to do? Can you be systematic in your approach and handle and weather the storms when things are going against you or things are going wrong? If you can do that, hey, all of a sudden, you're probably doing a lot better. Imagine you had a good trade going in your favor and you're taking it off early, and now you've got a whole bunch of losses that are coming in and piling in, or maybe just not as profitable. So this is where trading psychology is way more important than gossiping about news, companies, profits, earnings, all that stuff. That's just gossip. And as we know in high school, it really doesn't pan out very well. The other big thing that most people don't talk about when they're very popular, news driven, those kinds of things, is also position sizing. Look, you could go ahead and position $100 for a lot of different trades. I risk $100, risk another $100. But then you risk a trade where you're risking $500. Well, if you're not properly positioned for those trades, now that $500 trade could go against you, and now you've got a big loser where it takes you 5 trades to make things up. So for example, if I go in and take a look at this trade right here, I've got an SPX bearish 0-day trade. Now, all of a sudden, I position size with one contract. Could I go ahead and position now another one and another one? Yeah, absolutely. I could actually lock this in and position now 2 for the upside. But the point is that I could spread my money and spread my risk in different positions, different sizes, different allocations. And this is just one of them that's a vertical. If I actually look at the account and look at where I'm positioned in some of the other spots, here is a December 6th, which is another day out, because not another day out, it's out of vertical actually. So the same day, but it's a vertical that's further out in terms of strikes. And now it's positioned a little bit differently. Okay. So by position sizing in appropriate spots, you're able to weather certain storms. Let me look at another one here. Here's 2 puts. Here's 2 puts that I've sold as well. And this one's positioned way over here and also doing fairly well. So the point is that position sizing is another thing, and you could spread your money. But what happens is people position size too much in one spot, in one area at one time, and they don't know how to manage their money or capital. And this is one of the big things that big YouTube traders don't talk about, or investment channels, they don't really discuss these things. So I'd be very careful and mindful when you're looking at these things. That, remember, a lot of people that are talking about company news, events, those kinds of things, that's just for entertainment. It's not really going to help you that much with trading. When you're starting to talk about position sizing, risk management, how to allocate capital properly, how to manage those trades, how to look into a system, how to evaluate your previous results, that's really where you start getting into understanding what's happening and what's going on. Because when you start looking at the way all these positions are structured, if you look at just the way I position this, and this is just a paper account that I use for coaching and mentoring. So even looking at the way all this is positioned, I've got positions all over the place. It's not in one spot, and different things are doing different risks. So you've got your risk spread out in different zones. Anyways, that's the whole point, is that when you start looking and understanding this, this is much more important than really understanding who's more profitable this week, what the earnings expectations are or that kind of thing. Because if you over allocate in one spot, you can create some damage to your account. Anyways, thanks for your comments. Truly appreciate you guys. You guys are the smart ones. Thanks for joining me, and I will see you next time. And PS, don't forget to check out some of the freebies on the Traders Fly website, or if you want to join me one-on-one for some coaching, you can also see that on the website. I'll see you next time.